the dollar or any other fiat currency would be around. Gold and silver with them, it would be like Venezuela or Argentina. So you'd have to think in terms of purchasing power. How much would an ounce of gold or silver get? Because I think what holds the dollar and the pound, the euro, and all the other fiat currencies versus gold is the COMEX and LBMA paper game. So if that were to collapse, the currencies would collapse. That's my view. Get a lot for an ounce of gold. You might be able to get a fairly good car, for example, for an ounce of gold. Or for an ounce of silver, you'd be able to buy, a couple of iPhones or something like that, which you can't right now. So that's how I would look at it.
In today's show, we'll do a deep dive into the world of silver as there's a pressing issue that's been garnering attention: market manipulation. Mario pictures a vast financial arena where traders engage in buying and selling silver, but some influential players might be quietly tilting the game in their favor. This issue centers on major exchanges, particularly COMEX, where silver is traded. Concerns have arisen that these markets may not be operating as transparently as they should. Suspicion looms that certain entities, such as large banks, may be employing questionable tactics to keep silver prices from rising too steeply. It's akin to a situation where a few individuals hoard the best resources and make it challenging for others to participate fairly. However, proponents argue that if more investors opt for physical silver holdings like coins or bars, it could potentially counterbalance this manipulation, fostering a more equitable market environment. So for those contemplating silver investments, consider that possessing the actual metal might be a strategic choice to address these concerns and promote greater fairness within the market. In the continuation of the episode, we'll show you clips of Mario discussing this situation. Hit the like button, smash the subscribe button, and turn on the notifications bell so you do not miss out on our daily videos. Also, check our pinned comment for some massive sign-up bonuses if you're thinking about adding Bitcoin to your commodities portfolio, as Bybit gives you free $20 just for creating an account, so you can start testing the platform for free today. Enjoy the video.
Market, and they're another outlet aside from the futures to keep the public from buying physical. And why do I say that? Well, because if you read the prospectus, you can only really get the physical if you have 100,000 shares in the GLD. So very few people can afford that. You can't just buy one share and take a delivery of, let's say, an ounce of gold. And the other thing, unless you trust banks like JP Morgan and HSBC, then fine. Play the ETF. But as I read here, HSBC is the custodian of the trust, and Bank of New York Mellon is a sponsor of the trust. So you've got the banks that manipulate gold and silver, that are part of the central banking cabal running the GLD. So I don't trust that. As for the SLV, you said that they changed the prospectus. Yeah, and they can do that, and that's the problem. When you hold physical gold and silver, those coins never change over thousands of years. So this just shows you that I don't know exactly what happened there, but it just goes to show that they can change the game. And the custodian here, the trustee of the trust, is JP Morgan. So again, if you trust JP Morgan to be a honest bank, then hold on to SLV, but I don't. So that's how I see it. And I think a lot of times they take they do have metals for these ETFs, but they transfer them around with COMEX a lot of times when they run low on COMEX and vice versa. And so there's not really enough metal, in my opinion, in either, on COMEX or in these ETFs if people wanted their metal right away. So yes, I think they're linked.
Now, Mario will explain you the main differences between the various metal brokers and exchanges. Let's stay tuned.
For gold and silver, most people don't realize that gold and silver are traded as foreign exchange and has been for over 100 years in the city of London. So that's the LBMA. They trade over the counter and they trade mainly through the bullion banks. The other one, of course, is the COMEX, which is the Commodities Exchange. Used to be part of the NYMEX, but now it's part of the CME. There's a lot of consolidation. The futures exchange in the US. The silver futures has been around, I think, since the 30s. So it's been there for a long time. The gold futures on COMEX, yes, and on COMEX they only trade futures and options. On LBMA they trade what you call the cash or forwards. Forwards are like a future, but anyway, the gold future on COMEX or GC uh, kicked off on December 31st, 1974, because on January 1st, gold was made legal again after Roosevelt banned gold ownership in 1933. And of course, the silver futures is SI. It's a contract for, to buy in the future or sell in the future and take delivery or having to deliver. And then the Shanghai Futures Exchange is just an exchange that was created in Shanghai to trade not just gold and silver, but other commodities as well. They're not linked to the COMEX. And the last one there, LME. Well, the LME is really not a gold and silver exchange. It's more of a base metal or industrial metal exchange. They did have a gold and silver contract a few years ago, but that didn't kick off. Yes, it's the London Metals Exchange, and it's all traded. A lot of it is traded over the counter, even though I think they still have a trading floor. And lately, of course, there's been news that the LME would join with the Shanghai futures. And a lot of people don't know the LME is owned by the Hong Kong Futures Exchange. And I think what's going to happen there is that people on the LME will be able to transact indirectly, well, through the LME on the Shanghai Futures Exchange. I don't think the LME is going to become a big, it could become a big gold and silver exchange, but that would mean that China would be, picking up in terms of the importance. So those are the main gold and silver exchanges, and for us retail investors, we buy gold and silver off the precious metal dealers or the local coin shops, and they base a lot of their prices on, especially here in the UK, off the LBMA AM fixing and PM fixing.
Let's take a look at the silver technical analysis, as silver appears to be defending its $23 price level, which has held significance in the past. This could mean that we're in for a period of volatility and choppiness, which is quite typical for the silver market. If you've been trading silver for a while, you've likely grown accustomed to this kind of turbulence. The key to navigating this environment is to maintain a reasonable position size, as silver can be quite challenging for traders who underestimate its unpredictability. On the other side, gold and silver product sales fell in 2023 to their lowest level in 4 years. According to a Reuters calculation using monthly sales data, yearly sales of gold coins and minted bars fell to 66,589 ounces in 2023, down 40% compared to 2022, while silver sales were down 36% from 2022 levels at 14.9 million ounces. Monthly gold sales in December 2023 dropped to 36,000 to 97 ounces, down about 40% year on year, and silver sales stood at 681,490 ounces, 58% lower from the same month in 2022, the refiner said on Thursday. Now, we'll show you more clips of Mario discussing his insights and experiences into the world of precious metals. But first, subscribe and turn on notifications, as everything helps with the algorithm. Enjoy the video.
like ICBC and Bank of China, they recently left the LBMA. They used to participate in the LBMA, and now you hear, a few months later that the Shanghai Futures or Gold Exchange is linking itself to the LME. And what could be the impact of that? Well, it could mean that a lot of the gold that stays in London through the LBMA might go to China via the LME. And why is that? Well, I mean, maybe with geopolitical tensions racking up between, not just China, but also not just Russia, but also China vis-a-vis Taiwan. Um, you know, Maybe the Chinese banks left the LBMA before they were told to leave. The Chinese, they don't like to lose face, so that's maybe the kind of thing they would do. So yeah, and whether the regulators in the UK will allow gold to flow from the LME to Shanghai is another story. But if they do, yeah, I think it would be very detrimental to London, because London, still trades a lot of gold internationally. But if other countries see that China has been blocked from trading in London through the LME, then you might not see any gold, very little gold come to London. And why would they need to? And that would hamper the paper game, because the paper game is sometimes comes under threat because when people want delivery, but London always seems to have enough gold. But if this were to happen, who knows? A lot of the gold might flow out of London.
Happen.
Yeah, back in the early 1920s, the dollar and the pound sterling, were still like as good as gold. So uh, when tourists went to Germany, to Berlin or wherever in Germany, they were really loved, because they used to pay sometimes in even gold coin or dollars, because they're as good as gold. So that's how, and it's like if you go to Buenos Aires now, or Caracas, if you have dollars still, they love that, because their currency goes down every day versus that. But now, if that were to happen to the major currencies, there wouldn't be any other currency, fiat currency, that you would be able to take except for gold and silver. Some people might argue Bitcoin, but Bitcoin is a different story. But it's very volatile, and Bitcoin hasn't really been through a hyperinflationary collapse, I would say, of a major industrial country. Let alone the hyperinflationary collapse of the major reserve currencies. So I don't know what would happen to Bitcoin, but I know that gold and silver would still be accepted. I think gold did better than silver, mainly because gold is not as bulky. Silver, you need a lot more to silver, and it's difficult to transport. But I'm sure silver did well as well in Weimar, Germany. Yeah, and the reason why it did well is because they were de facto, and real things as well, of course. Farmers were quite ostracized during the Weimar hyperinflation, because when your currency is collapsing and you grow, crops or whatever, you got eggs or or pork or meat, you don't want to exchange that for a currency that's worthless. So you hold back, and that's why the prices go up. And people think that farmers are profiteering, but they know why would they give up something of value for something that's losing value at the rate of knots. So that's how I see it. Yeah. And of course, back then, there wasn't as much economic control by the central banks and governments. And this time, though, there is more. So I'm not saying it's going to happen exactly like it did in 1923 Germany, because they could, close things down and institute martial law or whatever. So, and maybe force people, to keep using the currency. But I'm sure people are, people always find an alternative, the black market, and I'm sure gold and silver will reappear.
What do you think of today's show? Is Mario spot on in his call regarding the gold and silver market situation? Will precious metals thrive in this fundamental scenario? Let us know your honest opinion in the comment section down below and post your gold and silver price prediction for 2024. Thanks for watching the video to the end. Subscribe to the channel if you liked it, and I see you on the next one.